Hey, VV Nation, Glenn Tompkins here, back from vacation. First 6 p.m. video for you, and it's on a hot story. Alibaba. Did you hear? Alibaba is splitting off not into one, two, three, four, and five, into 6 different companies, possibly. So I'm going to talk about what I think about this company, and then I'm also going to give you the good, the bad, and the ugly. And then we're going to analyze it for you guys out there to make a better decision on whether or not the news is worth the hype. All right, let's get into what I got going on here. I've got news articles from several different sources, and I wanted to, let you know what each one said differently. First one is Reuters. Reuters says Alibaba plans to split into 6 units and explore fundraisings or listings for most of them, said Tuesday, today, in a major revamp as China vows to ease a sweeping regulatory crackdown in support of its private enterprises. CNBC says Alibaba said in a statement that the move is designed to unlock shareholder value and foster market competitiveness. I think that that's a good thing, but there's an ugly side to that. I'll get to that in a second. Benzinga says Alibaba's reorganization will help unlock value, says Thomas Hayes, founder of hedge funds Tips. This is a huge move for shareholders, enabling the sum of the parts, which I do like about it. Instead of just getting into Alibaba as a whole, if they split up into several segments, you can jump on board with an individual segment that feels the best for you. So I do like that, to be realized on a much faster timeline. Now that I don't agree with. As you go into 6 different companies or 6 different segments, it's going to take time for them to garner some momentum and make sure that you've got the right CEOs in place. Remember, this will be 6 different CEOs for these different companies, still all under Alibaba. Now, there's another side of that. If a segment doesn't do well, Alibaba can distance themselves and sell that part off. So that's a good part. So there's some diversification here. Talking about diversification, what are the 6 different parts? High growth cloud computing and intelligence group. All right, AI is big, so they're going to have a part that's going to do a lot of AI stuff. Global digital commerce. So like the Amazons, like the Baidu, they're getting their hands into that. There's a lot of money to be made there. How about digital media and entertainment? Now, that's going to be interesting, especially if they think about dipping their hands into the streaming side of things. Is that a good business model, especially knowing that that space is so crowded and it takes a lot to put good content out there? How about a commerce unit that owns Tabob and Tmall businesses, okay? Kaino Smart Logistics, and I could be jacking up these names, you know me, but I'm just going to call it as I see it, and local businesses. All right, so 1, 2, 3, 4, 5, 6 different arms under the Alibaba brand. Now, this is the ugly part of it for me. Right? I like diversification, but at this point in time with this many companies under that umbrella, unless you have a plan that effectively that you can jump into and start running off of, diversification, this much diversification at one time, you want to be a jack of all trades, but then you're a master of none. This could lead to a sense of stagnation for the company as well. That's my insights on it. So what is this all about? To raise outside capital and seek initial public offerings. It's all about the money. You know why? Because cash rules everything around me. Cream, get the money. Dollar bill, y'all. So I'm saying that all of this is all about the money. Now, there's another part of this. Yahoo says, now this is interesting. Now let's take this to a different part. The government had criticized the influence of online platforms, particularly those of Alibaba and WeChat operator Tencent Holdings. This will likely mean the restructuring would draw support from government regulators who have been concerned that concentrated power in tech suppressed innovation. So now we go outside of all about the money to try to get a lot of the other governments on board with what they're doing, and maybe by diversification, again, investors have the opportunity or the ability to pick a certain segment that they think is going to do well. Wall Street Journal The reorganization of one of China's largest private companies, and this is important, why this is going on. Valued at more than $800 billion, but now worth a quarter of that. Now, I always look at inside moves or changes in restructuring as a positive thing to put a company back on the right track if they weren't there. At some point in time, you got to do something. Something's got to change. And this is a big move to helpfully change to make them a more profitable company. Now, keep in mind, Alibaba is a company that's been around. It's a company that people know. But at some point in time, you got to think outside of the box. And I think this is a good part of thinking outside of the box. Comes after Chinese authorities signaled in recent months, they were winding down sweeping regulatory clampdown aimed at reining in the country's powerful tech sector. So I think that's good. So the good part of it, I think the raising of the money, the news behind it, the momentum to push the stock's price higher, the bad, it's going to take time. All right. These companies are just not going to jump off and just start making money right away, or they might at the beginning, but we always see what happens with an IPO. It always jumps and then it pulls back until a company can really show its chops that it can be a viable company and viable for investors to invest in. So the bad part, it's going to take time. The ugly is that they're putting their hands into so many different things. Again, they're going to be a jack of all trades, but a master of what? None. And maybe the lack of focus on something may be a detriment, or the diversification puts more out there for people to invest in, especially in the segments that they feel the most comfortable in. All right, so that's my insights on the stock. But now let's go see what VectorVest says about the stock. Alibaba trading at 95 with a value of 46.99. So we clearly know that it's overvalued. It's the perception that the stock has got some upside that's pushing the price higher, so people are willing to pay a premium to own the stock. Now, let's get into the nuts and bolts. Upside potential. So this is why you do some kind of a reorganization, because as you look at how this company from an analysis perspective doesn't look so great, right? Upside potential, not there. Safety, not there. Timing, not there. Right now, it's trading as a 3-time loser. I don't have any confidence that it's got upside. The company doesn't always make money by way of relative safety. It's a riskier stock, and it's still not in an uptrend right now. VST at 0.80. That's our master indicator for ranking stocks. It's not good. CI, it's a hold. It's got negative earnings growth rate. Another reason why you've got to make a change. Negative earnings growth rate, positive earnings, no dividend. Let's keep going across. Volume is there. It's a well-known company. Today, big move on volume. Sales growth is negative as well. So if we know that earnings is the engine that drives a stock's price higher and it's negative, sales is the fuel within the engine and it's negative. So if I'm analyzing the stock, the news sounds great, but I'm not feeling warm and fuzzy about it just quite yet. Let's do one last thing. Let's go take a look at the graph. All right, intraday. This is what the stock is doing. The stock is rocking and rolling since the news came out this morning, rising up. And RT on the daily basis is rising up. Let's put it on a 3-month graph. Wow. When you start to see this happen, that's not good for the company. And the company at some point in time says, hey, we got to do something. Now I'm watching this beautiful level of support sitting at 79.94. Beautiful bounce off support, 3.8 cross. News today on big volume. RT is moving up. Does it have potential? Absolutely. Where do I give a price target on it? Let's go to 6 months. Let's go to 1 year. Wow, look at this. Go to 5 year. The stock was trading at one time at a price of $319 and is currently trading at $95, sitting in a little bit of a channel. Would I buy it now? Man, it's more of an aggressive play because of the news. This is news driven. Now, it's going to take time, I believe, for the stock to see the levels that it was over the last 5 years. Why? It's going to take time for these companies to get together, to get the right CEOs to these companies to see that they can garner what's needed for these companies, these 6 other companies to flourish. Right now, if I'm a short-term player, I like the move. Put this back on a 1-month graph. I like the move, but I'm also looking at the bullishness, big wick at the bottom of the candle today, wick at the top, but the body and the wicks, both of the wicks are bigger than the bodies. There's a lot of give and take back and forth in the news. A lot of people feel good about it. Some people are like, So right now, this stock has got to do a couple of things. It's got to get out of its own way. I've got a level of resistance at 97.14. Let's see if it can get out of that. And then it's got some upside, at least to the 1-year high of about 121. Does it get there? Well, let's go see how the investors take it, how this information is digested. It does have some upside. I like the bounce off support. I like the 3 and the 8. I like the rise in RT. Short term, I liked it. But if I look at the analysis of the stock, long term, not there. Safety, not there. RT may come into its own if the move by the current people getting into it based off the news, but that's important for me too. I need to see that the stock is in an uptrend. So with all of that being said, I've given you the good, the bad, and the ugly about the stock. I like the move. I like the news, but to a certain degree. I think too much hands in the pot may not be enough for them to focus on the right things that will make them money. That's where I stand on that. But I don't want you to miss out on the opportunity to make money on the news. Right now, I think it's just news. I don't think that it's moving into something that I would want to hold long term, but I would definitely keep my eye on it. I would put this into my VectorVest watch list. That's a hit list, and keep my eyes on it. I will have opportunities to make money on this stock, but I'm not willing to hold this stock long term. That's my insights. So tell me what you think about the stock. Do you think that it's a good move? Do you think that it's a move, or do you not even really care? Let me know in the comments. If you like the content that we gave to you today, the breakdown of it, because there's a lot of people out there reporting on it. If you like our breakdown, hit the like button, hit the subscribe button if you're new to the channel. With that, folks, this video is over. And until the next time, see ya.